When non-banking financial company Bajaj Finance Limited tapped the capital market in November, investors were willing to put in money even though valuations looked steep. 2019 was a great year for Bajaj Finance investors, with the stock appreciating as much as 60%. Valuations though are looking steep, with the stock trading at 7 times estimated book value for FY20. However, investors now seem to be taking note of the impact of consumption slowdown on the company's financial performance. Hello and welcome to Mint's Mark to Market show. Mark to Market is Mint's comments and analysis column where we look at market moving trends and news. My name is Pallavi Pengonda, and on today's show we will take a look at Bajaj Finance's early update for the December quarter. To begin with, the company has said that its assets under management have increased by 35% for the December quarter. For some analysts, the assets under management growth has been disappointing. However, the most concerning part is that the growth in new loans has come in at 13% for the December quarter, which is sharply lower than 23% seen in the September quarter. In other words, the company is not adding new customers at the pace at which it was adding earlier. This also means that the consumers is not willing to spend even if EMI or equated monthly installment proposition is dangled in front of them. One of the reasons for slower new loan growth addition could be increased competition. Large banks such as HDFC Bank Limited with distribution heft have increased their efforts in the small ticket loan segment. Slowdown in new loans addition could also mean the assets under management growth could slow down going forward. What this means that valuations of Bajaj Finance look even steeper now. Small wonder the stock corrected by 5% on Monday. One factor that analysts have flagged is the hit from the exposure to the troubled broking firm Kavi Financial Services. Some analysts feel provisions for the Kavi exposure may keep credit costs elevated for Bajaj Finance. Bajaj Finance management had warned about a slowdown in assets under management growth in the September quarter. However, the slowdown seems to be deeper than what the lender had anticipated. Even so, analysts are not in a hurry to downgrade the stock. That's because there are very few non-banking financial companies with such strong balance sheets. Further, investors are hoping that Bajaj Finance will put up a good show despite adverse times. Only this time, as the quarterly update shows, that may not be the case. A bunch of economic data may show that the Indian companies are coming out of a trough, but the Indian consumer is not yet ready to increase leverage. That's all for today on the Mark to Market show. Stay tuned for more updates. Thank you.